Hello and welcome to the Morning Market Call. I'm Greg Lee. Joining me today, Aaron Sider, junior studying finance in the Marriott School of Management and a member of the Capital Markets Club.
It's good to be here.
Aaron, welcome to the show.
Yeah.
We want to chat a little bit about mergers and acquisitions today. Want to get your take, your thoughts, what's going on currently.
Right.
So tell us first, why do companies acquire other companies?
Well, there could be a number of reasons why a company would go through the merger and acquisition process. One of the important elements of mergers and acquisitions can be it's a way to outsource research and development. I mean, why spend millions of dollars with in-house research and development when it might not pan out?
Sure.
So you can acquire a company that already has market research, already has a viable product, already has a customer base, take that package and run with it. There can be an element of synergy. You know, you can take two companies, put them together, get rid of some of those redundancy roles, and then you can, make them more profitable than they would be separately.
Now, both of those sound like really positive reasons to acquire. Usually there's a dark side to things, too. Tell me a little bit about the dark side of acquisitions.
Well, I think maybe one of the dark side could be the kingdom theory.
Okay.
You know, these CEOs are very aggressive people. They clawed their way to the top, and when they get to the top, they're the master of their kingdom, and they want to see their kingdom grow.
Okay.
And, shareholders like that. They like to see an aggressive CEO sometimes, but it can get out of hand, I think. So.
All right, great. So why has the mergers and acquisition market been slow recently?
I think plain and simple, there's been a credit freeze, and so credit is hard to come by. Right now, we're in the Great Panic. This is one of the worst recessions since the Great Depression. So there's a lot of uncertainty in the market. Uncertainty implies there's risk, and risk means that investors are going to require a higher rate of return. And so that hurdle rate for a project that would have been profitable, or an acquisition that would have been profitable 2 or 3 years ago,
right
now that hurdle rate is just too high, and it's just too expensive.
Now, it's interesting you point out the market uncertainty, because there is obviously a lot right now. That should serve to depress prices also, though.
Right.
So things are going to be cheaper right now, too, right?
Oh, absolutely. I mean, if you're a healthy company, if you're a AAA, have a good credit worthy, this could be your buyer's market. I mean, you look at Cisco, 2009 fiscal year, they generated $9 billion of cash. And so they're sitting on a lot of cash, and they're able to buy up some companies right now when no one else is buying, and they're able to get a little bit of a premium that way.
Awesome. So. Great. So what can we expect to see then over the next few quarters?
You know, it's difficult to say, but I think the M&A market isn't going anywhere.
Right.
It's here to stay. It's granted it's dormant right now. There's with the credit freeze, credit's hard to come by. It's expensive, but ultimately, I think in the next few years, we're going to see a return in the M&A market. So,
now, just from my own personal thoughts, I'm one of those that believes that markets are efficient to a point, but just based on human psychology, we tend to over and underreact quite a bit. Tell me a little bit about that. How is that going to affect the M&A market?
Oh, absolutely. There's quite a bit of pent-up demand here. I mean, I think companies are going to be looking to spread, looking to branch out, and there's also, like you mentioned, the human psychology. As the markets are going down, people have a tendency to jump ship, and as markets are climbing back up, I think there's going to be some fierce competition for some M&A. So
great.
Yeah.
Well, thank you so much for joining us on the show today, sharing your thoughts. And viewers, please join us next time on the Morning Market Call.
Morning Market Call is a production of the Marriott School of Business at Brigham Young University and is made possible by generous donations from Larry Pashjian and Gary Williams. This webcast was produced by Greg Lee, Tim Hart, Julie Kellett, and Jonathan Marugi.